Hi everyone, hope they're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's get right to it. Let's see what's going on and being shared in social media. If you want to follow me, it's at @play_finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects, looking for investment opportunities and sharing those opportunities for the commodity bull market that we are in and what is coming. If you're interested, special is a coupon code that you can use for savings, 50% off the first month on the monthly membership, and a larger savings on the yearly membership if you'd like to sign directly to the yearly or swap from a monthly to a yearly membership. So starting with Eric Yoon, says, it's been an easy journey for gold and silver. Most people don't believe that, and they still don't believe in gold and silver. Some people stand in the darkness, afraid to step into the light. Some people need help someday when the edge of surrender's in sight. Don't worry, it's going to be all right. He says, the more gold goes up, the more I think, oh man, that changed. If gold and silver continue trending up, gold might reach 2,800. That's just kind of patting himself on the back. I guess I've been living in the light, so to speak. If people are afraid and are standing in the darkness, well, I like gold and silver for a long time, and I think the platinum and palladium are also looking incredibly good. So it's not about darkness. It's not about light. It's about cycles. It's about cycles. That's all that matters, guys. And the major driver of cycles, one of the major drivers, is interest rates. 1982, interest rates peaked. We bottomed in 2020, 2021. We broke the downtrend shortly thereafter. And we are in a new paradigm, and people don't understand that. So it's not about being in the dark. It's just not knowing history, not knowing about the cycles. Now, that doesn't mean just because interest rates recently broke out that it's going to just poof, everybody gets it overnight. No, these conditions have to be applied to the humans consistently and constantly. Higher interest rate, higher inflation, higher interest rate, higher inflation. Eventually, people will come to believe that interest rates will not go back to levels like 2020, 2021. That is when people will start to turn. Their ideas and their paradigm will shift. The linear thinkers will finally say, hey, you know what? Something's different here. Why does everything keep going up? Why is beef $17 a pound or $20+ a pound for ribeye steak? It wasn't like that 3, 4, 5 years ago. So it's not standing in the darkness, not knowing. And it's not like the light means that you know everything. But gold and silver go up when bonds don't work. Gold and silver go up even more when stocks don't work. And people are going to say, well, the stock market continues to go higher. Just wait until rates continue higher. If rates continue higher, the stock market won't work as it used to. It's going to face a very stiff headwind. And the only way we got to the valuations we got today is because of where interest rates were in 2020 and 2021. Now we're just running off momentum. It's like Wile E. Coyote going off the edge with their, his legs still going, or maybe is that Roadrunner or Wile E. Coyote, whichever one. And then they fall. So they sit there, they pause before it falls, and that's exactly what I think we're doing in the stock market. We've got like this momentum where everyone is so bullish, and it goes up, 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 up until bullishness says, what am I doing here? It's so overvalued, it's ridiculous. Or they look at interest rates and say, well, why are we over here? Interest rates are paying 5, 6, 7, 8, 9% interest rates. Let's maybe move back into bonds. Coming down, what company is worth less than $10 billion today but will be worth plus 100 billion in the next decade. I think that there's a whole bunch of them in commodities. I think there's a whole bunch in energy service, in oil. I think there's maybe some if they can develop some mines in copper, lithium. There's a whole bunch. There's a whole bunch. I think I've probably got, I think there's a possibility that I'm identifying single digit, 1, 2, 3, 4, 5 billion market cap companies that will be 100 billion in the next decade. Think about that. I think there might even be, yeah, low single digit billions right now that could be 100 billion in a decade. I think there's a few of them. Getting rich, optimism, risk taking, swing for the fences, and staying rich is a little pessimistic, skeptical, room for error, says Morgan Housel. I think there's a good sweet spot between those two. It's not about swinging for the fences, and it's not about staying rich. It's kind of like combining. It's using knowledge and using knowledge of valuation and cycles, where you can get the staying rich companies at a time in history where they're so cheap and the market conditions are so out of favor that it feels like you're swinging for the fences. So what a lot of people do is they say, I want to up my risk. They think that higher risk automatically equals higher rewards. I'm here to say that that's not the case. I think that there's a better approach, and you can combine Warren Buffett, you can combine a little bit of technical analysis, you can combine a little bit of these cycles, and you kind of want to get at a cycle bottom in something that's got a lot of oomph, but you're buying it when it's really cheap. And that's the combination of getting rich and staying rich. It's using everything in your arsenal of skills to get you on the right side of the trade. And if you can size up really big trades, you don't need a lot of money in there. So you're protecting or staying rich by not using all of your wealth. You're not going all in. You're using smaller amounts of money, perhaps. And you want, 10 or 20 grand to be a smaller amount of your money. So you could put 10 or 20 grand. Now, if you put in 20 grand, you get a 10 bagger plus. A 10 bagger is $200,000. A 20 bagger is 400,000, and a 40 bagger is 800,000, or potentially maybe even up to $1 million in a single investment for a decade. And that's where, if you can size these big moves up and you can accumulate enough wealth fast enough, you can do this over and over and over and over. And if you have, let's say you have 100 grand that you want to put in, you have 5 picks at 20 grand each. Okay, that makes sense. Or 10 picks at 10 grand each. And then you have a good, diverse set of picks that can potentially carry you to the promised land. Motley Fool says, high income won't make you rich. Low ego and high savings will. Low ego. That's a select choice of words there. Justin says, the most successful people I know spend their money to get time to think, sleep that works, exceptional health, a life without much noise. Very few of them are buying, quote, stuff. Now, I don't know what this means. I don't know what he defines as the most successful people. Most people define success through financial means. But right here, if you define success as this, then I don't know. I mean, that's like saying the most successful people are this. Or conversely, if you say it backwards, people who have this are the most successful people. Now, I don't know. I mean, I think that's highly dependent on what people want out of their life. Money is just a tool to get you what you want. And if people want different things, that's fine. But I would resonate with a lot of this. I would resonate with a lot of that. Eric Yoon, another one, says some experts are now saying that $4,000 gold is going to be a major top, and that a nuclear slam will happen at or right before $4,000 gold. How do they know this? Are they just picking these random numbers out of their butt? I mean, I'm being serious. Like, why is it a nice round number of 4,000? Why did they choose 4,000? It just so happens to be this round number. Now, the guy responds with, they're just trying to shake out the weak hands. This train isn't stopping until we get a global monetary reset, which I think is also, there's a lot of validity to that. What does that mean? They're just trying to shake out. Guys, think about this. What are central banks doing? They're accumulating gold. What are all the governments, well, at least our government in America, what are they telling you to go buy? Go buy cryptocurrency. Think about that for a second. All of the central banks in the world are basically running, tripping over each other, trying to accumulate gold as fast as they can. And they're telling everyone else, hey, go buy this crypto over here. Go buy this intangible asset. Good luck with how it plays out. No, I'm going to go after the real stuff. This stuff. Gold is leaving the COMEX fast. Physical COMEX gold delivery volume is up more than 3 times, both for July and for the whole year. It looks like there's a golden trend. Guys, go buy some crypto. We don't need you buying physical gold. We already have enough people buying the physical. Get out of here. Go get some crypto, right? Yeah, it just keeps going up and up and up and up for physical demand. A salary is a tool you can use to buy assets that will eventually be used to replace your salary. Do you understand? Well, that's what I did. I invested early and young, very heavily, to get away from the 9 to 5 because I didn't like working the 9 to 5. It just didn't. It was like I was on a different wavelength for a lot of it. I tried really hard in the beginning. I really did. I tried really hard. I did really, really well. I added a ton of value to the company, and in all honesty, I just didn't feel like I was getting rewarded for it. And most of the people, the way that they would evaluate you was on how hard you worked. And I never understood that. I was like, well, just because I make something look easier than everyone else doesn't mean my outcome wasn't better. So I was always of the opinion that if I was that much more efficient than everyone else, well, shouldn't I get paid that much more? If I make it look easy and I don't disrupt any of the resources to get what I need done, well, shouldn't I get paid more money? Does that mean I plan better? I don't know. Just thought that was interesting. Quite a comment from Enbridge's chief executive. The issue is one of government policy setting the conditions for that to get investment to occur. Let's be honest, the government has not done that yet. And it's not clear they intend to, at least from our perspective. So these are energy insiders saying, look, our government policies, even though they say drill, baby, drill, they're not doing jack crap for us. But they want us to produce at very low prices. Why? I'm not doing that. Like, none of this makes sense, guys. I mean, if they want to produce more, wouldn't they put stuff in there to incentivize energy producers to produce? Asset says faulty labor data is misleading America, warns job numbers are no longer reflect of reality. This is a very important thing to get right as job numbers. There's 2 things that drive decisions at the Federal Reserve. It's inflation and unemployment numbers. So when I look at the data, I think the inflation numbers are completely cooked. And then with this most recent labor market data where they're adjusting massively, and they've been doing this for a little while, I'm like, well, okay, the 2 most important things that the Federal Reserve looks at is being adjusted all over the place or highly manipulated, depending on how you look at it. That's not good. A one-time thing is transitory. It says, well, what do you know? Inflation was a one-time thing during the pandemic if a real-world measure of shelter inflation is substituted for the BLS version of the same weighting. It's also notable that the peak inflation experienced during the pandemic, 12% annual rate, was much higher than anything the BLS reported. Current level is pretty much bouncing around the same level as pre-pandemic. And Lynn Alden, who is also an engineer and understands math, thank God some people understand math in this world, she says a one-time thing equals a permanent step up in prices due to a permanent expansion of the money supply, benefiting those positioned for it at the cost of those unable to be. Wow, that's profound because it's right. I don't understand people. They're like, oh, this one-time thing. It's like, no, I don't think beef is going back down. I don't think the price of health insurance is going back down. I don't think car insurance and all these other things that people are paying for are going to go back down. This isn't a one-time thing. This is a permanent step up in prices due to a permanent expansion of the money supply. Totally agree. OPEC plus voluntary production cuts are done. OPEC plus crude exports, since the truncated production increase started in April, have been flat. The real supply increase will come in September. Saudis are in control, but there's a caution signal flashing. This is crude exports pretty much flat. I mean, we had a little bump in June, but it came back down to flat. Are they pumping all out? Everyone but Saudi? And if we get this expansion in production, is it really going to materialize in exports? I don't know. We'll have to wait and see. But this is the true data here. Not much exports increase over these past, month or so. The dividend dominator says after $2-3 million, there's no difference in your quality of life. Do you agree or disagree? It says, I have a secret to share. Shh. After the first 2 to 3 million, a paid off home and a good car, there is no difference in quality of life between you and Jeff Bezos. Both of you have limited amount of time on earth. You have twice, if not more, than Jeff. So you are richer than him. A cheeseburger is a cheeseburger, whether a billionaire eats it or you do. Money is nothing but a piece of paper or a number in an app. Real life is outdoors. Become financially independent. That's usually about 2 or 3 million bucks. Have good food, enjoy the relations, work out, and enjoy whatever you'd like. Call your parents. That's all there is to life. Greed has no end. Repeat after me. Time is the currency of life. Money is not. Sooner you figure this out, the happier you will be. I would agree with that. I would agree. And I know a lot of people win Lambo and all this crap. In all honesty, guys, I don't even want a Ferrari or a Lamborghini. It's a headache. What I want is a reliable car that's fun. Give me a Mazda, give me a Honda, give me one of those. But yeah, after a couple million bucks, I don't think there's a huge discrepancy, and that could vary a little bit. Maybe it's 2, 3, 4, 5 million bucks. It depends if you have a family and where you're located in your life, how much your expenses are, et cetera, et cetera. But yes, the big difference in life, if you really want to know, is your health. That's it. The healthier you are, the better you feel, the more things you can do. That is quality of life, not 2 or 3 million bucks. Being able to run, being able to walk 5, 10 miles, being able to experience things without pain. There's a big difference between a 50-year-old who is stuck to a wheelchair versus a 50-year-old who can run a marathon. Imagine the quality of life differences and the ability, if you do go on vacation, to go walk 5 or 10 miles to experience in a city by foot. It's a very big difference. $2 or $3 million may not be able to buy you that type of experience. Coming down. Okay, I already went over that. So that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you like. And that's all I've got. So we'll catch you next time. This is Finding Value.